Welcome to Inside India. I'm JP Ong, and here are your headlines. LG Electronics' long-awaited India IPO will finally hit the markets today after a record round of subscriptions in the country's most heavily bidded listing. Google is set to ink a $10 billion data deal in New Delhi and one of the biggest foreign investments for India. And gold hitting fresh record highs amid a continued rush to safe havens, and that glow also lifting silver along for the ride. And finally, free. The last of the remaining living Israeli hostages were released by Hamas as attention now turns to the second phase of President Donald Trump's plan to end the war. And a good morning to you all. Before the start of the Tuesday session out in India, we're going to take a look at how Asian markets are trending in their Tuesday morning session. It's mostly mixed to the downside. You can see there are prominent shades of red actually among major indices. Once again, another testy day that is for the Hang Seng, which trades about 0.25% in the red. But a different outcome, it seems, or a different morning out in Shanghai. A little bit brighter, though, up by about 0.5% for A shares in today's session. The Nikkei 225 coming back from that week, that extended weekend. In the red, down by about 1.2%. Meanwhile, we're seeing the likes of the Kospi and the TAIEX also rebounding from yesterday's losses. The TAIEX up by about 1% in Taipei, while in Seoul, the Kospi also up by about 0.5% in the green. Indian markets also set to come online in about 45 minutes. And we take a look at what Gift Nifty futures are indicating. Today, we are seeing renewed optimism once again for Gift Nifty futures, forecasting gains of more than 100 points above Monday's close. Mind you, Monday saw the Nifty actually snap a two-day winning streak and close down by about 0.5%. But we did see the Nifty actually maintain its breach of 25,000 during that time. And so far, we're seeing it a bit more sturdy, actually, for the Mumbai benchmark the last couple of weeks. The Indian rupee, though, starting to soften once again at 88.68 against the U.S. dollar. And again, also signs, at least, of the currency continue to it's a weakening downtrend as it has for most of 2025. A big event, though, for the Indian markets today, with shares of LG Electronics India set to make their debut in over an hour. Here's how its Korean parent is trading at the moment. We're seeing that LG Electronics in Seoul is up by about 2.1% so far in today's session. Perhaps a lot of optimism at this much anticipated IPO for its Indian subsidiary out in Mumbai. They are looking to raise over 1.3 billion U.S. dollars actually via this offering, and the gray markets are indicating that perhaps it might actually trend higher. The much-awaited IPO saw huge demand led by qualified institutional buyers, making it the most subscribed billion-dollar IPO of the country in nearly 2 decades. We will talk more about this in India's consumer electronics story later on in the program. Meanwhile, U.S. markets also rallied overnight, 4 days after U.S. President Trump escalated trade tensions with China with a 100% tariff threat. U.S. Treasury Secretary Scott Bessent sought to de-escalate. He's told Fox News that both sides have been speaking over the weekend, and both Trump and President Xi Jinping of China are still on track to meet in South Korea at the end of this month.
Yes, that's the signal that the president has given. He did say in his in his truth post that he could always pull it forward, but the idea is to give them time to meet and talk this out. They have a very good relationship, and I believe that the president thinks that this may have been, from a lower level official. The Chinese system is quite brittle, so this may not have come from Xi Jinping himself. This may have come, from a Chinese hardliner.
But the U.S. and China are not letting up in other areas. Beijing is now charging port fees on American vessels, just hours before U.S. port fees kick in. Elaine Yu has more on this latest tit-for-tat between the world's two largest economies. Elaine, I was wondering when you get back to ships, ports, and vessels, actually, what's the latest you can tell us with regards to the escalation in this part of the tariff war between the U.S. and China?
Right. We're seeing the U.S.-China rivalry spilling into the maritime and shipping industries. And the Office of the USTR has alleged that China has engaged in unfair practices to build up its domestic shipbuilding capabilities. And now the U.S. has initiated port fees taking into effect today on Chinese-built vessels, those operated or owned by Chinese entities, vehicle carriers, and also additional tariffs on equipment from cranes to top loaders. Now, Beijing has retaliated, calling the U.S. actions discriminatory, and they have come up with special port fees on U.S.-linked vessels, also effective today, calling them a necessary act of defense. Now, this will significantly increase the operational costs for shipping companies, and ocean carriers have told CNBC that they are preparing for new fees and rotating Chinese-made vessels out of U.S. routes. And ocean carriers such as Maersk have also said they won't be passing on those costs to customers. And we had a chance earlier to speak with Jean Soroka, the head of the LA port, about how businesses are strategizing. Let's take a listen.
A little more than 20% of all the vessels that call here are China-made. There will be some adjustment of moving those ships to other trade lanes, whether it be inter-Asia, long-haul Middle East, or even in the Asia-Europe space. So we'll see that unfold over the weeks and months ahead. And on the volume side, it's been really choppy, as you know. We saw when hard trade policy came out that cargo effectively stopped coming out of China back in late April and early May, and then picked up after those policies were eased and timelines extended. Now, with what was stated this past Friday, with an additional 100 percentage point on China imports to the United States, much of the conversation I had over the weekend and in today was, let's wait and see. We're not going to put in new orders. We're not going to move really quickly here until we understand what's happening.
So we'll track how much diversion all these fees cost. But another motive of these port fees by the U.S. is to bring or to shore up that shipbuilding abilities in the U.S. And Jean Soroka said that is something that could take decades. The U.S. shipyards currently produce mostly military vessels, and there's a question of cost, finding the workforce, and also its equipment as well. Soroka said about half of the shore-to-ship cranes in LA are made in China. So a lot more work needs to be done to onshore the supply chain as well, perhaps not unlike rare earths, JP.
Yeah, absolutely. There are a lot of parallels between the shipping industry and perhaps the rare earths and all of these movements by the U.S. and China to try and gain more ground in this escalating trade war between the two economies. Elaine, you with the latest there with regards to the shipping fees hitting the Chinese vessels, and that also imposed tit for tat against the United States. Lumber duties, also imposed by the Trump administration, come into effect today, actually. Starting today, Washington is going to collect a 10% levy on timber and lumber imports. Upholstered wooden furniture and kitchen cabinets will also attract 25% duties. Meanwhile, India and the U.S. are set to resume trade talks this week, with New Delhi's negotiators heading to Washington. Ahead of that, an Indian Trade Ministry source told Reuters the country is looking to buy more American energy in a bid to ease tensions over Russian oil imports. Talks were briefly stalled after the Trump administration imposed tariffs of up to 50% on Indian goods back in August. Exports have taken a hit, but both sides are now aiming to meet the fall deadline for signing a trade deal. Energy, renewables, and investment will be at the core of discussions. Meanwhile, India's retail inflation eased to an 8-year low of 1.54% in the month of September. This is driven by falling food prices. And that's below a Reuters poll forecast of 1.7% and well under the RBI's 2 to 6% tolerance band for the second time in about 3 months. The decline is fueling hopes for another rate cut by the RBI in December after the central bank lowered rates by 100 basis points earlier this year. The RBI has also raised its growth forecast to about 6.8%, keeping India the fastest growing major economy. We are also watching for wholesale inflation data that's due later today. In fact, we're joined now by Alexandra Herman, who's lead economist at Oxford Economics, to help us do a bit of a safety check, or a health check, actually, for the economy coming off of those CPI figures. Alexandra, thank you so much for coming by and joining us today.
Thank you very much.
I do want to start off with the CPI data, showing signs of easing once again. And sometimes there are concerns when you see it below the policy band of a central bank. But because it's down mostly to falling food prices, which means that the cost of food might be more affordable for most Indians, is there anything to really worry about with regards to this decline if it's going to be from this one key component, which in this case is food?
Indeed, you're absolutely right. It was mainly down to an outright year-on-year decline in food prices. Energy price growth has also come off a little bit, but as you say, core inflation, the less fluctuating part of the consumer price basket, so that includes both fuel and energy prices, that has been actually relatively stable over the past year. In fact, yesterday's data showed a pickup in core inflation from 4.1 to 4.6%. Now, core inflation, we also have to be a little bit careful these days interpreting, because gold is also a part of core inflation. So what we like to do is look at both core inflation as a whole and then stripping out the more volatile gold prices as well, or I say volatile now, really the surge in gold prices that has actually driven up core inflation this year. So stripping that out, we're still just hovering above the 3% mark in gold prices. Now, is that a sign of weak sort of underlying demand pressures? Yes, we would say yes. However, we're not terribly concerned. It is still, yes, it is only at 3%. Core inflation is still above the RBI's overall midpoint target of 4%. And core inflation has actually been relatively stable since late last year, around 3 to 3.5%, excluding those more volatile gold prices, especially this year, obviously, when we've seen a 50% surge in gold prices since the start of the year.
Yeah, let's go back to what that point there. Are there cracks in the consumer story out in India? Because a lot of hope is being pinned on the strength of the domestic economy and also the GST reforms really boosting consumption there. It seems like it's all systems go for consumption in India. It looks fairly strong for the most part. Are there any cracks that we're missing there, Alexandra?
So I think the cyclical consumer story right now is pretty strong. So like you say, you've pointed out the GST reforms. We actually think they could bring inflation in the final quarter of this calendar year down to around 1% or even lower than 1%, around 2% at the start of next year. So definitely sort of the income story, the real income story is there. Rural incomes especially strong after a good monsoon season. So that sort of cyclical aspect, that all lines up at the moment. But definitely what we've been pointing out for quite a while now is sort of the structurally weak consumer in India. Labor markets are structurally relatively weak in the sense that half of the population is still employed in agriculture. Agriculture, like I said, this year obviously strong with a good monsoon, with good rural income growth, but in years where the monsoon is below average or is very volatile, very erratic, that obviously weighs on rural incomes much more. Incomes are much more volatile. People need to save to be able to cushion those income impacts over the future as well. So sort of rural incomes is the one part of the story. Now urban incomes, much more dependent on the external demand story as well, the services sector, the service sector exports. Those obviously not hit by tariffs yet, but in this environment where global uncertainty is extremely high right now, sort of on the goods, but also on the services export side, that's certainly weighing on urban labor market prospects as well, and caution is warranted. Consumer confidence is taking a dent on just because of these uncertain labor market prospects.
So if this is cyclical demand that's driving the upbeat consumer sentiment in India at the moment, how long before we cycle out of that and we start to see some of these structural weaknesses or these cracks show up in the consumer space? Because as perhaps you know as well, consumption is such a big, if not the biggest driver for the Indian economy and insulating them from a lot of these external headwinds. Consumption
is certainly the single largest expenditure component in the Indian economy. So yes, we've actually seen some high frequency data from Q3 where consumption actually already saw a sort of a cyclical downturn, a little bit of weakness. We do think that Q4 sort of into Q1 will benefit from the lower inflation figures overall, from the GST reforms that also push down prices that we will see show up in the inflation figures. But then sort of towards the middle of next year, we are more worried that the external external demand headwinds weigh on the economy overall much more strongly, and then that's when we'll probably see a slowdown in overall consumption. But then, coming from a low base, we will still see the strong growth numbers in both consumption and in Indian headline growth. We don't see any faltering to below 6 or even towards the 5% range. That probably not, but base effects are also a strong story there.
So if we have about, say 8 months before the middle of next year where we start to see these structural cracks start to show up in the cyclical demand cycle out, is there anything that they can do in that time period to address some of the structural issues to make sure that that impact is mitigated? Or is this something that India will just have to brace for by the time we get to mid-2026 if this all plays out?
I think structural reforms will play a large role in that. So when we speak about the GST reforms, for instance, we are obviously focusing on the near-term inflation impact, the direct price impact that consumers will feel, and that will bolster demand to some extent at least. What has been positive about the GST reforms is sort of the more structural side of things, the compliance issues being addressed, the sheer reduction in the number of tax brackets from 4 to 2. That makes business compliance also a lot easier. So I think these types of structural reforms, not just the cyclical boost, the cyclical fiscal stimulus that we will probably be seeing by the GST reforms and other tax cuts, for instance, over the next few months and quarters, that is the positive side. And that will drive overall investment, and that will also help strengthen the labor market, strengthen urban labor markets, increase productivity, increase not only urban productivity, sort of the classic urban sector jobs, more service sector driven. That can also strengthen manufacturing productivity. That can also strengthen agricultural productivities to some extent. So what we're looking out for are a lot of these structural reforms, the GST, like I said, being one very positive aspect in those, other structural reforms potentially down the line. Otherwise, fiscal spending on infrastructure build out. That continues to be very strong. The government commitments to infrastructure spend, to capex spend in that regard are still very strong. That will also help drive business investment. So those are the kind of things that we look out for India's structural story, obviously also feeding into the cyclical aspects, but that's sort of the structural patterns that we continue to monitor.
Yeah, so does the central bank or the RBI have a role to play with regards to some of these structural reforms? And I guess the question here really is, does this create a case for them to cut now if we might be heading for this mid-year reckoning next year? I mean, there's a case there's a strong case that says that they have room to hold. That there's also a strong case that says we have to head this off at the pass. Where do you sit right now, Alexandra?
Yeah, no, that's a great question. So we've actually, even before the GST reforms came in, were announced, even let alone came in, it was quite a quick process now that they became effective. Already before that, we held the view that the RBI will probably cut once more to 5.25. We do think that cut will come in December. We've already said that after the October meeting. Now the inflation figures, they sort of reinforce the picture, but actually I don't think the RBI will be driven solely by the GST reforms or by the weak inflation numbers now, because sort of circling back to where we came from at the start, because they are largely supply side driven. So last year when food inflation was extremely high, the RBI always cautioned that yes, we need to especially pay attention to the second round effects, but it wasn't actually the first round effects that played a huge role in their decisions. And I think we're in a similar story now. The GST reforms and the low headline inflation is what we're talking about, right? The low headline inflation, that in itself won't push the RBI to cut again, but it certainly sort of, if you need another sort of tipping point, the cherry on the cake, I think it will lead the RBI to reduce their rates again in December. Sort of, yes, exactly, front loading another cut as we head into sort of a bit of a cyclical slowdown. Private investment still not quite picking up yet. The previous rate cuts, the 100 bips that we have seen so far, have not quite fed through yet to lending rates. They are slowly feeding through, but not quite yet. Investment slowly picking up if we look at bank lending growth, for instance. So yes, I think the RBI will try to counter rising external headwinds that could sort of feed into the cyclical story as well, and cut again in December, but leave it at that.
Okay, finally, Alexandra, it's fascinating. I do want to ask you about what the overall fiscal health for India is right now, because they've seen a lot of changes right now. External headwinds from these trade tariffs that could impact them negatively, GST reforms that have cut taxes, but also cut tax revenue at the moment. Some say that India is in a good place, actually, fiscal space, to absorb any of these shocks at the moment. Do you think that that is true? I mean, do you agree with that right now?
I would generally agree with that, yes. I would say India has the fiscal space in a sense that the government is really, really committed to fiscal prudency, to continue pursuing its fiscal consolidation path. I don't think the deficit target of 4.4 for this fiscal is in huge jeopardy. We might see some slippage, but I think coming from 4.8% last fiscal, there will definitely be some fiscal consolidation. And rather than, I think what the government will opt to do is rather cut spending in other areas that are potentially, less that have a little bit of a less voter impact, a little bit less visibility, rather than risk any fiscal slippage and risk their deficit target for this year.
So everything okay for now, but perhaps some risks to watch out for by the middle of next year, and hopefully the policymakers there are on top of everything. Alexandra Herman from Oxford Economics, pleasure to have you with us right now, and thank you for stopping by and sharing your insights on where the Indian economy is going, especially against the backdrop of that softer CPI print. Before we head to a break, let's show you price of spot silver now hitting a fresh record high. In fact, we're seeing here that the shiny precious metal, now at $52.95, up by 1.1%. You can see it's upward and very steady trajectory, actually up 83% since the start of this year. The precious metal is on a remarkable rally so far, and again, in India, silver is trading as much as 10% at a 10% premium to these global prices, and thanks to strong investor demand. Many of the silver ETFs have halted their purchases due to the shortage of the metal, with jewelers also struggling to meet the demand amid the busy festive season when buying usually sparks up. Well, time now for a quick break. We will be back in about 2 minutes with more on Inside India. Don't go away. Welcome back to Inside India. Here's another one of our top stories. One big step towards peace in the Middle East, as President Trump declared the end of a 2-year war between Israel and Hamas.
But the momentous breakthrough that we're here to celebrate tonight is more than the end of the war in Gaza. It's with God's help, it'll be the new beginning for an entire beautiful Middle East. From this moment forward, we can build a region that's strong and stable and prosperous and united in rejecting the path of terror once and for all.
And President Trump of the United States brought together leaders from European, Arab, and Muslim countries in Egypt to discuss the future of the Gaza Strip. Palestinian Authority President Mahmoud Abbas was present. That governing body would like to take a big role in governing the Strip. But Hamas representative and Israeli Prime Minister Benjamin Netanyahu were both notably absent. The mood still somber as tens of thousands of lives have been lost over the last 2 years. Israel welcomed home 20 hostages who were the last to be freed from Hamas captivity yesterday. Palestinians also returned to a decimated Gaza Strip, where the immediate next steps are to deliver food, fuel, and shelter. Meanwhile, back in New Delhi, India and Canada are agreeing on a new roadmap to revive ties after nearly 2 years of strained relations. Following talks in New Delhi, the two sides pledged closer cooperation in critical minerals, trade, and agriculture. Tensions flared in 2023 after Canada accused India of involvement in the killing of Sikh separatist Hardeep Singh Nijjar, allegations India has denied. Relations have since warmed, with Prime Minister Modi meeting Canadian leaders at this year's G7 summit. And after the meeting, Indian Foreign Minister S. Jaishankar also called for advanced collaboration in various sectors, including AI and critical minerals.
Both sides, for our meeting today, have prepared an ambitious roadmap to advance our cooperation in various domains, including trade, investment, agriculture, science and technology, civil nuclear collaboration, AI, critical minerals, and energy.
And India's Central Electricity Authority has unveiled a $77 billion transmission plan to move more than 76 gigawatts of hydroelectric capacity from the Brahmaputra River basin by 2047. The blueprint spans 208 hydro projects across the Northeast, with Arunachal Pradesh alone holding over 50 gigawatts of potential. Officials say the basin carries 80% of India's untapped hydro reserves, but its transboundary nature with China makes water security a strategic concern. Beijing is also building a dam on the river's upper course before it enters India, and many fear that could cut dry season flows on the Indian side by up to 85%. A government-appointed panel has also recommended India must slash nuclear project timelines, secure long-term uranium supplies, and expand reprocessing. The country is targeting 100 gigawatts of nuclear capacity by 2047, up from just under 9 today. The panel says project delays of 11 to 12 years must be cut through faster clearances and land acquisition. It urged boosting domestic and overseas uranium sourcing, opening the sector to private players, and stockpiling fuel for reactor lifespans of up to 60 years. Well, coming up, Indian markets and investors are keeping their eyes on LG Electronics India's listing today. We will take a look at India's consumer electronics sector ahead of that with Bain. Stay tuned. You're watching Inside India. Welcome back to the show. And a quick look now at gold and where it is trending. And always believe in your soul. Take a look at the precious metal touching record highs once again this morning. $4,158 per troy ounce for the safe haven of choice so far. Year to date, up 58.5%. Spot gold now holding firm above that $4,100 per troy ounce level as well, as it continues to show that it goes from strength to strength. We're also counting down to the market open in India. And this is how we're shaping up in a final check of Gift Nifty futures. Once again, foreshadowing that gains of about 80 points when markets open. Well, now about 85 points up in the green. And again, perhaps signs that perhaps the Nifty can make sure that the Monday step back was just a one-day affair, actually. The Indian rupee looking softer today, up 88.73 against the greenback. Now, the Indian state of Andhra Pradesh will sign an agreement with Google today to build a 1 gigawatt hyperscale data center. The campus will be located in the port city of Visakhapatnam and is part of a near $10 billion investment by the U.S. tech giant, that is. The project, among Google's largest in Asia and one of India's biggest ever FDI commitments, will deploy the company's full AI stack and clean energy integration. State officials project it will contribute massively to Andhra Pradesh's GDP and support nearly 200,000 jobs. OpenAI announcing yet another tie-up overnight. This time, it's tapped Broadcom to make its first ever in-house AI processors. OpenAI will design the chips and Broadcom will make them from the second half of 2026. OpenAI has been ramping up its spending, announcing deals with NVIDIA and AMD in just the last few weeks. Broadcom CEO Hock Tan telling CNBC each of these deals was needed to meet surging compute demand.
The market for compute capacity is large and growing much faster than any one of us can handle. Even though the path towards, for these few LLM players, they want to create a platform. I'm talking about critical utility for society. We're talking about generative AI. Now, I don't try to sound a bit high, but you think about it logically. The GDP of globally is about 110 billion, give or take. 100 trillion, yeah. 110 trillion. Fully 30% of it is valued from industries related to knowledge-based technology.
And that's what can go up.
And you put in generative AI, you create intelligence in a lot of other aspects of society. That 30%, say, will grow to 40% of all GDP. That's 10 trillion a year.
Well, staying with the tech and AI theme, Samsung Electronics out with guidance for its upcoming results. The world's largest memory chip maker expects operating profit will rise 32% in the third quarter to $8.5 billion. That will be its best quarterly profit in over 3 years and well above the street's estimates. Samsung is benefiting from strong demand for its server and other AI-related chips. Shares of Samsung today in Seoul down by about 0.5% actually, despite that very upbeat and very optimistic, encouraging guidance. 92,700 won per share is where it's trending now, down by about 0.2% as it tries to find its footing amidst a shaky start to the Tuesday session out in Korea. Well, let's move on to Samsung's peer LG Electronics. Shares of its Indian unit will now debut in the markets in about half an hour. CNBC TV18's Hormaz Fatakia joins us live from Mumbai now. Hormaz, there's a lot of buzz with regards to LG Electronics. It seems that the gray markets might be showing that there's a lot more appetite for this. What exactly are the gray markets telling us right now after it got some of those bumper bids that we got wind of recently?
It's promising to be a very strong listing for the Indian unit of LG Electronics. It was a record-breaking IPO, and the grey market rates are also indicating a similar listing premium as well, a $7 to $8 premium compared to the issue price. And so the subscription was equally strong, and that is showing up in the initial rates as well in the unlisted markets. You take a look at the subscription figures, was 54 times being the overall subscription, led mainly by the institutional institutional investors that placed a majority of the almost $50 billion worth of bids that LG Electronics did end up receiving during their 3-day IPO. The retail portion, the non-institutional portion, all of it received healthy subscription as well. What it also went on to do is it became the most subscribed Indian IPO that was valued at just over $1.2 billion or more. There's a very strong subscription figure there. Analysts have already started to bet on the stock before its listing. We have had an initiation note coming in from Motilal Oswal where they have mentioned that the base case price target implies a potential upside of 58% and the bull case price target goes up to as high as 83% from the issue price. They're saying that LG remains well positioned to capitalize on the growth opportunity in India's home appliances and consumer durable sector, and they believe that the premium valuations will sustain because of their strong return ratios, the higher operating cash flows that they generate, their targeted growth in the high margin business and the leadership position across key product categories. There are multiple other notes that have come in as well, anywhere projecting upsides between 35% to as high as 50%. So it promises to be a strong debut for LG Electronics. Let's see where this day goes.
Yeah, and it means that the valuations for LG Electronics, if it does pop when it starts trading later on, could also be quite lofty. But how would those valuations compare when you stack it up against some of its peers in the Indian market?
When you take a look at that, it presents a mixed picture of sorts. I'm talking about pre-IPO rates, of course, at the upper end of the price band of the IPO. The price to earnings multiple for LG is well below its peers compared to Voltas, Havells or Blue Star, valued at 29 times 1 year forward in comparison to its peers that are valued anywhere between 40 to 45 times. Even on the EV to EBITDA front on a 1 year forward basis, LG valued at 20 times, peers valued anywhere between 30 to 35 times. So on the valuation front, at least on a pre-IPO basis, it was cheaper in comparison to its peers. But the growth prospects, though, in terms of growth projections for the next 3 years, that is where the concern lies, because LG is projected to grow at 9.2%. Now compare that over the next 3 years, compare that to stocks like Havells or Blue Star. They are projected to grow anywhere between 12 to 15% on the revenue front. Now even on the EBITDA front, LG is projected to grow at 10.1% compared to Voltas, Havells and Blue Star that are projected to grow anywhere between 12 to 18%. Now that's where the concern lies. We did speak to the management earlier and they highlighted that they are continuing to double down on India. They are investing in a new manufacturing unit in Andhra Pradesh's Sri City. It will entail an investment of around $600 million. Production comes on stream by the end of next year, and they are also doubling capacities, investing in new products and in new technologies as well. The AC business, according to them, will be the fastest growing, and the B2B business will continue to drive margins going forward. So the management remains optimistic on the growth prospects going forward. It promises to be a very strong listing for LG Electronics India.
Yeah, and about 52 minutes before we start to see just exactly how they do in their first day in the public markets. Exciting times. Hormaz Fatakia from CNBC TV 18. Thank you so much for helping us with that very important preview. And as Hormaz mentioned, LG Electronics is doubling down on making in India. So we decided to take a closer look into the country's consumer electronics story. A 2024 EY report says India is the fastest growing consumer durables market in the world. EY pegs the sector to expand over 11% annually through fiscal year 2029, and by fiscal year 2027 rank fourth globally in terms of market size. The growth is expected to be driven by rising incomes, greater household penetration, premiumization, and shorter replacement cycles for these products. Ravi Swarup is the head of consumer products at Bain India to help us get a closer look and a better, deeper understanding of this very big, fast-growing, and slightly more complicated space, the consumer durable sector that is out in India. Ravi, thank you so much for joining us again. You heard the comments from Hormaz Fatakia about LG Electronics India's prospects ahead of their much-awaited listing later on. The report from EY, and no surprises that in a country of more than 1.4 billion people, you'll have a very strong consumer products and consumer goods sector, actually. But how has this space in India evolved over the years, especially given how quickly India has grown over the last couple of years?
Great. Good morning. Thank you for having me on the show. I think the growth has actually been multi-year growth, but the nature of growth has actually changed in its decomposition over the years. in recent times, for instance, premiumization and upgrades have been a significant growth driver compared to penetration increase. And I'm talking about the last 12 to 18 months. Segments like 55-inch plus TVs, smartphone above $300, 5-star inverter ACs, big capacity refrigerators, BLDC technology fans, a lot of technology innovation, health and energy efficiency, connected devices, features and design have actually led to premiumization. Penetration growth has always been an opportunity and continues to grow for different product categories. A big enabler has also been consumer financing, which had slowed down in the last year. But it's almost 40 to 50% of appliance purchases actually financed by consumer financing. So overall, I think if you look across categories, and I'm happy to speak more specifically, there is a huge headroom and there's a fair bit of innovation, both by Indian as well as global players in the Indian market.
So let's talk about that, Ravi, going into the specific subsectors that are showing more growth, and really just highlighting also what are some of the factors that make some of these sectors grow faster than some of their peers. Help us understand sectorially what's growing faster in India versus others.
Great. Actually, there are subsectors in almost all segments of product segments that actually have faster growth. For instance, in smartphones and TVs, upgrades and faster replacement cycles is the big driver of growth. There is already very high household penetration. ACs is a story of household penetration increase, where both local players like Voltas, Blue Star, Havells, and foreign players like LG, Daikin, Hitachi, Haier, etc. are growing. Refrigerators, again driven by upgrades and better homes, so larger refrigerators, better value. So the drivers are different, and there are new segments being created like wearables, audio, which again has several interesting innovative startups. So really the drivers are different. Premiumization is evident across categories, but the drivers of penetration versus premiumization vary slightly by sectors.
Yeah, Ravi, let's talk about those Indian players, actually, because maybe some of our international viewers are not as familiar with the likes of Havells and Blue Star. We heard from Harmaz a while ago that revenue and EBITDA projections for these Indian players might actually grow faster than that of LG Electronics India. Is this a sign that perhaps some of the local players in India are starting to gain more significant market share and foothold as compared to some of the larger MNCs at the moment? Or is this a trend that's really been happening for the last couple of years?
That's a great question. India is a fairly multinational friendly country. So really, it's not the country of origin that's the differentiator. It is really the player that has built the strong foundations of local manufacturing, sourcing, economies of scale, the right portfolio, investments in brand distribution, service networks that really drives market share growth. So especially in ACs, companies like Voltas, Blue Star, and Havells have actually significantly invested both in manufacturing as well as in product development over the years, and therefore the ability to compete with players like LG, Daikin, Hitachi is fairly strong. Having said that, there are segments like smartphones, TVs, where it's pretty much still multinational dominated, where the technology component and rate of development is quite high. So is it going to be a faster growth for them? Or really, it's a level playing field, so really more competitive forces come into play here.
Yeah, I guess the bigger question also here, Ravi, and if this is just take a step back and perhaps a bit of a history lesson, some people wonder why there hasn't been an Indian global player in the white goods sector, similar to, say, an LG or, say, a Samsung or, say, even a Haier, for instance, in China. Why do you think that is? And does a Havells or a Blue Star perhaps stand a chance of becoming a bigger and maybe even, dare I say, a global player in this particular space and catch up with some of their peers in China, South Korea, or elsewhere in the world?
It's a great question, and with the disclaimer that this is a little bit of speculation on my side. Historically, a lot of growth was really just serving the market, right? Unmet needs by products and technology that has been developed elsewhere in the world. Product innovation, technology innovation was not really the big requirement for growth. And therefore, we were kind of following the world in products and technologies that are already mainstream in the rest of the world. Having said that, I now understand that the companies you mentioned and other companies are actually innovating as well. as investing in the back-end manufacturing supply chain, and will have capability to serve larger parts of the market. So going forward, I would not be surprised if there are other parts beyond the boundaries of India that some of these local players start to serve through their strong foundation in India.
I guess you brought up innovation there, perhaps being important also for the consumer goods sector in India, but you could say that for a number of other industries in India. For instance, the tech sector, which some believe might not be performing at its potential at the moment. Again, is there a need perhaps for a broader focus on actual innovation within Indian companies to perhaps help them move to that next level, Ravi, not just in the consumer goods sector, but perhaps for broader industries across India as a whole?
It's a great point, and personally, I continue to believe that companies, there are companies that actually invest in innovation, but there is room for more. Like I mentioned earlier, a large part of the focus was just serving the value market and the mainstream market with power for the course products, and innovation as a big source of growth versus design to value was not really a huge priority in the past. Having said that, it really is a call to action for the Indian players to step up on innovation. A lot of signs are already visible, whether more design-led innovation, pure tech innovation, like I mentioned, has more headroom in my personal opinion.
All right, Ravi. Perhaps one other argument as to why India shouldn't think globally yet is because there's still so much of the market in India, 1.4 billion people, various regions actually, to try to contend with. So focus on capturing this particular space. One thing that LG Electronics also indicated is that they're planning to beef up their manufacturing presence in India for consumer goods companies like the LGs of the world or MNCs that are trying to come in to India. How important is it going to be for them to have an extensive and comprehensive manufacturing supply chain to support their penetration or their attempts to grab more market share in this fast-growing but very competitive market?
It's extremely important. India is a large country. You need both agility, flexibility, economies of scale, fast product development cycles, and local cost structures to be able to serve and compete in the market. So therefore, I think especially in the segment that we are talking about, having back-end capabilities and an integrated manufacturing and sourcing setup could be through ODMs, but really very much local is a critical requirement for any company in this space.
All right, Ravi, I have a question to ask with regards to the consumer story in India. This has captured a lot of attention over the last 6 months. And again, no prizes to guess. It's really down to the GST reforms. We did have a guest a while ago from Oxford Economics that pointed out that the strong consumption story in India has been fairly cyclical, and there's still some structural issues there to address, such as low unemployment and perhaps signs of weakness in some of the subsectors. Do you think that that's something that the consumer goods space will have to contend with, perhaps a possible cyclical slowdown sometime in the middle of next year? And could this actually perhaps dent appetites and perhaps ambitions for companies like LG Electronics India as they try to broaden and perhaps cement their foray into India? Basically, is there any, do you believe in the fact that perhaps consumer demand might be facing some of these structural cyclical downturns by the middle of next year?
In fact, my opinion is quite the other way around.
Sure.
So 2 points to make here. One is that the premium segment, at least in the foreseeable future, I don't expect any slowdown of that segment as long as the companies continue to innovate, bring the relevant products to the market, have consumer-friendly, journeys, omni-channel experiences, after-sale service, etc. It's really the mainstream and economy segments that did have some stress in the last 12 to 18 months. Varies a little by segments, but rural demand as well as mainstream and economy segments have struggled a little bit for depending upon the sector. That was led by high inflation, food inflation in 2024, high debt leverage of middle and low income households, poor monsoons last year. A lot of triggers by the government should help revive that demand. Like you mentioned, GST cuts, easing of lending norms by the Reserve Bank of India, income tax cuts earlier this year, food and rental inflation in urban centers has eased out, And therefore, I do expect, and early signs are already visible for mainstream and value demand, as well as rural demand to actually starting to pick up. So I do expect we are hopefully on the other side of the cyclical slowdown, especially in the mainstream and value segments.
And going back to that one key point you were hammering throughout this interview, Ravi, innovation will be key for consumer goods products. Take advantage of this of the trends. Ravi Swar from Bain India, thank you so much for joining us today and giving us a better understanding and education on the Indian consumer goods sector. Now, it's an IPO party in India, if you haven't noticed, and we'll have a new entrant in the market soon as well. Asset manager Canara Robeco's $150 million IPO was fully subscribed on Monday, the final day of its three-day bidding process. The Mumbai-based firm received bids worth over $239 million, 2.3 times the shares on offer, with strong demand from institutional buyers who subscribed to 4 times their allotted quota. The IPO values Canara Robeco at up to 53 billion Indian rupees at the top of its 253 to 266 Indian rupee price band. The offering is entirely an offer for sale, with Canara Bank selling a 13% stake and Japan's Orix offloading 24.5%. Shares are set to debut on October 16. Well, coming up, we'll track how Indian markets are shaping up as they have joined the trading day now. Also, look at some movers and shakers in Mumbai after this short break. Stay tuned. We're back in 2 minutes. You're watching Inside India. Indian markets just came online about 8 minutes ago, and we're seeing the Nifty 50 looking quite nifty, up by about 0.3%. Perhaps that Monday step back was indeed a bit of a blip as they're trying to make up a little bit of that lost ground. 25,297 is where the Mumbai benchmark now sits. Let's take a look at the Indian rupee now, and soft she goes for the local currency, about 0.1% weaker against the greenback at 88.75 against that U.S. dollar. Quick look at how shares of HCL Tech are now faring in the Tuesday morning session. We're seeing HCL Tech shares up by about 1.2%. Not as well as Tech Mahindra is doing, though, up by about 1.2%, but a pretty optimistic start nonetheless. India's third largest IT exporter maintained its annual revenue growth forecast of 3 to 5%, despite global macro uncertainty. The company beat second quarter revenue estimates, with consolidated revenue rising 10.7%, led by strong growth in its engineering services segment. CEO C. Vijayakumar highlighted higher deal bookings up to $2.57 billion, driven by M&A and essential client spending. Positive earnings from peer TCS and now HCL Tech are fueling hopes of a recovery in the sector that was sluggish due to muted demand from the United States, one of its major markets. IT companies Tech Mahindra and Persistent Systems are also reporting earnings today, and we can see here that shares, as we mentioned, of Tech Mahindra looking good at 1.4% in the green. Nifty, and we're seeing the Persistent Systems shares up by about 0.8%, not by as much as some of its peers, but still pretty optimistic and encouraging nevertheless. Now let's take a look at how shares of Tata Capital are doing at their second day of school. And we are seeing Tata Capital up by about 0.1%. The third largest non-bank lender in India had a muted debut on Monday, valuing the company at around $15.8 billion. The IPO last week did not see a lot of investor interest, getting bids worth around $3 billion. Its listing comes nearly 2 years after the Tata Group's last IPO of Tata Technologies that listed at a 140% premium to issue price. Speaking of the Tata Group, the conglomerate is pushing ahead to boost its electronics manufacturing capacity. CNBC sources say Tata Electronics has acquired Chinese iPhone supplier Justech's India unit for about $100 million. The transaction was concluded in August with HSBC Bank and HDFC Bank advising on the deal. You can read more about the story on our website, cnbc.com. Dubai's Emirates NBD is reportedly in advanced talks also to acquire a stake in India's RBL Bank. Sources told Reuters that the Dubai-based lender is eyeing an investment through a preferential allotment of shares and warrants, with the initial stake potentially growing up to 25%. Emirates NBD, the UAE's second largest bank by assets, has been looking to expand its footprint in India after earlier talks to invest in IDBI Bank. RBL Bank, valued at about $2 billion, is widely held by retail investors and fund houses. Shares now trading for RBL Bank up by about 3.1% in today's session. The deal coming as the RBI considers easing foreign ownership rules to attract long-term capital into the country's banking sector. And that's all the time we have today on Inside India. But keep watching CNBC because Access Middle East is coming up next. Have a good morning.